Good morning, everybody, and welcome back to Schwab Coaching for our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, pleased to be joined this morning by a good buddy of mine, Mr. Jeffrey Abalos, Regional Investment Strategist for Charles Schwab. Good morning, Jeff. How you doing, man?
Hey, buddy. Great morning. What a great day today is going to be. I can feel it. We are off to a wonderful start. I am here with you and very excited to be joining all of our viewers on Trader Talk this morning. Hello to all of you. Really excited to see what we've got on the market this morning. So thank you very much for having me.
Yeah, absolutely. I'm excited to get down to business too. You know, we had a big event here in Denver, the Technical Analysis and Options Workshop this past weekend. I got to attend and support and meet a few of those of you that are frequent attendees and bring some newbies into the mix as well, introducing some of them to the Schwab YouTube coaching channel here. I'm excited. I'm hopeful that some of you that we did shake hands with this weekend are here. So thanks for being here, everybody. Say hey to Mike Fairborn there in the chat. He'll certainly be there to answer questions that Jeffrey and I are unable to get to this morning. We will be looking at your comments, at your questions, though, so feel free to post for the duration of our show. We will try to bring those in to the discussion where we can. Additionally, I want to remind you, obviously, of some important details relative to disclosures. So let's get to those quickly, and then we'll get into the meat and potatoes of our discussion. So remember that our conversation is always informational and educational exclusively. We do not make recommendations. We do not endorse a particular approach or strategy to trading the market. Additionally, we talk technical analysis here. That's a big part of our discussion, is looking at the charts and understanding the price action. But technical analysis is not intended to be the lone decision-making process for you. Please consider it a piece of the overall puzzle. We encourage you to take a multi-layered approach to your research, your analysis, and decision-making. So keep that in mind as well. Now, in this segment here, everybody, we take a review of the market in what we call the top-down methodology. What that means is that we start with the broad indices. So we'll hit up the S&P 500, the NASDAQ 100, the Russell 2000, and then we're going to work our way into some industry groups of importance. Of course, we'll be talking about the semiconductors, and we'll be looking at some of these other sectors this morning as we get a little bit of a picture as to where we reside after a really strong 2-week push here, 9 consecutive up days on the broad indices, a little bit of enthusiasm as to that, due to that, as we headed into the weekend. And here this Monday, we've got a little bit of a weakness to kick things off. A couple of key components before we get started. I want to remind you all that we would really appreciate a follow from you on X if you're not already doing so. Mike Fairborn and I are both available there, as all the Schwab coaches are. You can follow me, Kevin Horner CS, and you can follow Mike there, Mike Fairborn CS, a good way to engage with us outside of the classes that we offer you. So if you've got questions or you want to follow us there, you can always drop a line to us that way. It's a good way to communicate with us. Now, I already saw a question about how can I attend one of these events? Well, let me make that clear for you, everybody. Here is the Schwab YouTube coaching page, and this is a wonderful bookmark location for you. Not only do you get the access to our upcoming events, the calendar for those via the live webcasts and virtual workshops. By the way, we've got a virtual workshop going on this afternoon through Thursday. So today, tomorrow, Wednesday, and Thursday, a virtual workshop available for you. Check the calendar for that. But if you're looking for those in-person events that I was mentioning, it's right here. Our next one will be coming up in Anaheim. That's an advanced options workshop, 2-day event. We ask you to bring your device with you, come out to the event, hang out, get logged on, track what we're doing on the stage, and further your education that way. It is a wonderful opportunity to take your learning to the next level. And then beyond the basic 2-day workshops, we also provide you these market drive events. We'll be in Miami, we'll be in New York as well in June. These events are more macro focused, less education in terms of step-by-step understanding options or understanding technical analysis. These market drives are going to be the more 30,000 foot view, understanding the components of the macro environment. What are market participants paying attention to? What are they worried about? What are some of those things that we want to keep in mind as we move forward? So please consider these as opportunities for you, everybody. We would love to have your attendance and joining us these events. These are really great for us, but we hope they're just as great for you. We enjoy quite a lot putting them on, to be quite honest. So, okay, Jeff, let's get down to business. I know I just flashed in that Market Watch page, but my goodness, there was a lot of red to get us started this morning. Here I have the S&P 500, Jeff, and we have, like I said, a little bit of red, about down 0.7% to get us started. What are we watching on the SPX today?
Well, first of all, it was a great call out. I thought you made 9-day winning streak, longest since 2004. Wow, that is a long time. But is that good? Is that bad? I know if I've done really great things day after day after day, I'm probably due for some struggles maybe over the next couple of hours or couple of days after that. So what are traders looking at? Well, I think potentially, Kevin, what folks are looking at, that blue line, first of all, is we are going higher. What the heck is that blue line? And I assume, I don't know this for sure, but I'm assuming that's your 20-day simple moving average. Is that correct?
That is the 200-day simple moving average. You got it.
I knew it as soon as it came out of my mouth. I was like, grab that statement and pull it back. That is not the 20, that's a 200. Okay, so that's the 200. So I think that a lot of folks out there who are trading are probably going to be keeping their eyes on that. The 20, the 50, and the 200, as you see on this chart, are what everybody's probably going to be paying attention to. Why? Because that's what everybody looks at. If I'm looking at the same thing as Kevin, and Kevin's looking at the same thing as Derek, and Derek is looking at the same thing as Mike, well, then we're probably all going to see similar movements, whether it be support or resistance. So to a lot of traders out there, that might be your short-term resistance level. Right now, it looks like it's at 57.46. Kevin, the other thing that I'm noticing that might be capturing some attention for traders out there, take a look at that 50-day simple moving average. I believe that's the orange line. Is that correct?
That'd be the purple here, right beneath us.
Gosh, off to a great start already, Jeffrey. Nice job, big guy. So
go easy on yourself, sir. It's a Monday morning. You're allowed.
It's a Monday. It's Cinco de Mayo. Happy Cinco to everybody out there who celebrates that. But yeah, that 20-day simple moving average coming down, and now you see that kind of up bend. All right, that's a little bit of short-term potential bullish indication. Now, how many folks are going to read into that as, oh, great, now's the time that everybody starts buying as we potentially butt our head into that 200? Kevin, I don't know about that, but I think right off the bat, those are some things that are probably capturing a few traders' minds. What about you, though, my friend? What are you looking at this morning?
I think you and I are largely on the same page here. One of the reminders that I want to give is, of course, that, great start, wonderful last 9 days, but we are dabbling with trading beneath the low of Friday. Why would that be important? Well, if Friday is the high in our rally, everybody, the first indication that we're going to be in the midst of a bit of a pullback, not a reversal per se, but a potential pullback to a zone of support, would be a close below the low of our high day. So if Friday is our high day, and then we're going to look at the low we made there, that low was 56.42, and you can see we're about 5 points above it right now, everybody. In fact, we tested it. Our intraday low is 56.38, and then we got a little bit of a bounce, right? So we'll see how that persists. A close under there today would be a bit of a heads up. Some bearish traders would take that as the impetus to start covering long side and start looking to the downside in the short run. Now, Jeff, if we were to see a little bit of a pullback here, we've got some levels for consideration. Certainly that purple 50-day moving average could be one of those. There's a bit of a gap level in here. We had a big gap here, and then we gapped through it from Wednesday overnight into Thursday, and then we got the carry through on Friday. So this is a logical spot at about 55.75, as would be either the gap ledge back here below the 20 or the 20-day itself. Jeff, there'd be some real potential optimism if it were the 20-day that were held on a closing basis, right? I mean, the idea being that we could see some continuation of trending from here if that were the case.
Yeah, after a big, long 9-day winning streak or any real strong winning streak, a lot of people will think, well, okay, I don't really like this term, but a lot of people use this, so I'll say it now, but it's referred to as a dead cat bounce. Is this just some of us coming off the lows and saying, wow, that was way too far, too fast, so let's go up quickly? But there's no movement or momentum behind that. And so I think a lot of traders out there might be considering, is this a short-term dead cat bounce? And I think, Kevin, you bring up a really good point, my friend. And that is, if it can hold that purple line, that would give you a little bit more indication of potential strength that this is a longer, maybe more intermediate term bullish run as opposed to just a short-term movement off of the lows.
Yeah, I agree with that. I have one other question I want to toss your way, though.
Yeah, what you got, big guy?
Thoughts about the potential support of a moving average that has a pretty clear downward slope to it, like the purple 50-day compared to the 20-day, which is letting us know that the short-term price action clearly is much improved versus that more intermediate term price action. Your thoughts?
Yeah, really great question. So when I'm looking at, and I think for a lot of traders out there, especially when you're looking at a downtrending moving average, or even it could be an uptrending moving average, but something coming down on a down slope average or something going up on an upslope average, I think a lot of folks out there may be more inclined to say that could still lead to further bearishments since our line is moving down. Now, think about when you've got a bullish market, everybody. Bullish market, you come back down to that moving average. Well, the market is moving up, your average is moving up. So even though you've got to pull back, that could still lead to further bullish movements. Same thing here. We've got a downward moving market, downward sloping moving average. There may be some support help, sure, but you do really want to see that start to get back into positive territory, kind of like what we're seeing on that orange line, Kevin. So just some things that I think a few traders are keeping in mind. Kevin, I'm going to ask you a question because I get this from a lot of clients who are especially new to trading. So for those of you that know, little fun quiz for all of you out there. Jeffrey and Kevin just said there is a 9-day winning streak. However, I'm seeing red candles. How could we have a 9-day winning streak with red candles? Could you help explain that and allow our viewers to understand that a little better, Kevin?
Yeah, good question. Let's talk about just the standard makeup here. Is everybody that we are looking at a red candle versus green. Green is going to be assigned with closes that are above the open on any given day. Red closes that are below the open on any given day. So ultimately, it is not based on overnight or change from the prior day close, but rather change from the open of the current day. Now, that's the way that I've got it set. There's certainly an adjustment that can be made to that extent. You as a trader, you might want to see the overnight change in lieu of did it close above the open price. So be aware you can make that change. You can do that in the icon details in here. Jeff, I believe that is
It's somewhere in there.
Adjustment.
It could be. Yeah, forgive me for not knowing that off the top of my head.
Yeah.
If our friend Mike could put that into the comment section, or if one of our viewers who is much better at the navigation of Thinkorswim knows that, go ahead and toss that in.
Yeah, but please do.
Because that's essentially the answer, right, Kevin? Is
out.
Intraday versus overnight. Yeah.
Yeah, I know we could figure it out real quick, but I'm going to continue the conversation since it's a bit more, maybe a little bit more important that we get through all these major moves today, because we are seeing a little bit of a bleed through as we speak. So let's move into the NDX. Let's see what's happening here. We're off about, well, I got to make sure that I can actually link this up. Doesn't seem as though my icon is there. There we go. All right, so we're at the NDX, and there we are. Very similar view here, Jeff, except the NDX actually made it to the 200-day there on Friday, right? So right to it, look at that candle. And I mean right to it. The high, 20,176. Today's 200-day, 20,176. So once more, concern tied to whether we trade or close below the low of Friday here on the NDX.
Yeah, one thing to point out too, Kevin, for the viewers out there, when you're trading something like a NASDAQ 100, people are going to be looking for where is that moving average happening. In this case, it's the 200 right there. But if you're wondering, okay, well, what about further movements? Could this continue to expand? One thing that you may consider doing is looking at the individual components, which we've talked about before on this show. But take a look. What's driving the NASDAQ 100? Remember, this is just an index. It's a basket of companies. Take a look at which companies are moving the needle. So what would I want to do? I'd want to find out who exactly is the largest percent holder of the NASDAQ 100. Then I would say, what is that company doing? Maybe get a little bit more insights. It's a bit of that checking beneath the surface that can help to understand what might happen on your next movement. If you see weakness in those underlying companies, that could mean weakness for the overall index.
Yeah, it certainly could. It bears watching, no doubt. You can certainly easily do a little bit of digging to find your weightings within the NDX 100. Wouldn't take too much effort there, so make sure you check that out. Saw a note here out of Carol, nice move on the RSI. Hey, you're right, Carol. It is a good move on the RSI. We took out a level of importance when we made that new move to the upside, but I have to point out a couple of things. RSI higher than it's been, but the level to which we rallied was about 60. So overbought conditions in a bearish market for a lot of traders. Remember, overbought as it relates to the RSI traditionally is over 70. But in bearish markets or in pullbacks that are significant, like we've undertaken here in the last 2-3 months, you generally might see the RSI only get into a range between 50 and 60, and that becoming an overbought signal and a potential pause to any recent uptrend. So yeah, it's an improvement. Having moved through a level of potential resistance, we don't mind that. That's all valid. But remember, price is king here, everyone. And the thing that stands out, two things that stand out to me. One, 50-day crossing the 200 to the downside. So we have a longer term trend development potential to see that continue. Number two is we are also, having met the 200-day moving average, potentially pausing in the rally. And three, Jeff, this is still, if this is the point at which we lose steam in the rally, well, that's either at best a matching high, but definitely not a higher high, right?
Right.
And we can also just fall back into technical analysis 101 stuff, Jeff. If we're not making higher highs, it's going to be really hard to have an uptrend.
Really good call out, Kevin. Yeah, it's very basic, but it's good to return to the basics. Yeah, you're absolutely right. And I think this is also a period of digestion. And what I mean by that for the viewers out there is we are smack dab right in the middle of earnings season. A lot of information is coming at us very quickly every single day as companies are releasing their earnings. For example, you've got earnings this week coming from Palantir, DDOG, AMD, ANET, Uber's coming out, ARM. That is a lot of potential information being thrown into the market. Now, what happens when people are fed a lot of information? We tend to pull back, not pull back on the chart, but I mean, we tend to just sit back and say, I'm not going to take any movements. I'm not going to maybe buy some things. I'm not going to maybe sell some things. I'm going to wait and see how this sort of sifts out, if you will. So that's also a reason to be wary of what's happening in this upward movement is, do we get enough momentum from these underlying components to say, yes, this is a good bull run. Let's push ourselves past that 200-day simple moving average, Kevin.
Yeah, that's exactly the exact thought process I'm undertaking as well here, Jeff. Let's move on to the Russell. Let's look at small caps. This is going to give us a chance to further our discussion around what some of you are already making note of. We are going to be hearing from the Fed this week. So, Jeff, we've got the Russell at a very important ledge here. Now, let me clean this up. I've just got way too much going on here. We were having a chat on Friday, or rather Saturday morning, about this in my I was set up at the monitor outside of the event there.
Fun.
And I was holding court, man. I had 20 people frequently coming up with a multitude of questions, and we were talking about everything under the sun. It was a really fantastic weekend for me because I want nothing more than to stand around and talk charts and sink or swim. So those of you that made it, thanks for being there. Jeff, as it relates to the Russell, we're sitting on that 50-day. Yeah, we're a bit more negative today, down 0.9%. That's a leading negative amongst our major indices. And yet we're not below yesterday or Friday's low just yet. So there seems to be a little bit of improvement here. But nonetheless, I'm wondering, I'm a little dubious about its ability to maintain this if the concerns of the broad market are so heavily tied to a potential recession, as we may have heard in the last week or so.
Yeah, remember everybody, small caps tend to be leading indicators, meaning if it's going up, they tend to be the ones going up first. If they're coming down, they tend to be the ones coming down first. Kevin, I noticed though, we close above, and here's the tough part for me, and I hope everybody caught this, and yes, I do need my breakfast tacos. Good shout out to the viewer that mentioned that. I'm not used to the color of the lines. I thought I knew enough to be able to say, hey, yeah, that's the 20, that's the 50, that's the 200. Nope, I've got too much anchoring on the colors of the lines, apparently. So as I'm looking at that purple line, and correct me if I'm wrong, you said that's the 20-period simple moving average. Is that right?
Purple is 50.
Purple is 50. Okay, all right. I must have missed it already. Let me grab a donut here, everybody, and I'll be back in a second. But one thing I see there,
yes.
Yeah, right. Get me a little bit of caffeine. So you see that movement above the 50 line. For a lot of folks out there, they might see that and say, oh, look at that, a close above the 50-period simple moving average. We are now in a bull trend. But Kevin, this brings me back to what you like to call, and correct me if I'm wrong, do you have something referred to as the Horner rule, and how exactly might apply in that situation?
Well, yes. Let's just restate it. Yeah, by default, you might think the Horner rule is all tied to the rule of three. Three closes above a level that you deem to be resistance can be considered validating for the trend or for a shift in trend. Having moved through resistance, some of you want to see confirmation, and ultimately, that's what we're talking about here: is assigning what you determine to be a validating confirmatory signal. For some, it's 3 consecutive closes over resistance. For others, it's the very first day. They want no indication of waiting for more confirmation. They want to be aggressive and they just need 1 day. Some traders want to do it on an intraday basis, Jeff. A lot of us encourage or give you the thought process of leaning into closing values because they tend to carry more weight for the trader or for the trend. But ultimately, what it speaks to is just having a plan, defining what it's going to make it very simple for you to place a trade, whether to buy stock, to sell stock, to be invested more aggressively, or to be a bit more defensive. That's all we're talking about. So give yourself those bullet points that'll make it really easy to make a decision in the moment. Because what I have certainly learned, Jeff, and I'm guessing this might be similar for you, if you are in the middle of a trade and it's going even in your favor, and you're reaping profits left and right, and it looks like, oh my gosh, this thing is just crushing for me. That, even if you hadn't considered it, even though it's going well, your anxiety is increased because you did not think about what your plan or your process was going to be. I didn't expect this to happen. Oh my goodness, this is going great. Then you're evaluating in the moment. And now your emotions are having an impact on your decision making instead of just standard, basic, black and white decision making without emotions. I think that's so important, Jeff.
You're absolutely correct, my friend. Remember, everybody, it's process over profits. Focus on improving your process and the profits will come. Great call out, Kevin.
Thanks, man. So, all right. So there's your Russell. Now let's look at yields briefly. There's been not a lot of movement on yields here. We're in this range at 4.3%. Looks to me, though, Jeff, like we have banged our heads on this zone here a few different times now that we've come back and tested it a couple of spots. So keeping an eye on this is certainly important to an extent. But I think the bigger factor here is, Jeff, there's really no expectation of a change to the details coming this week when we hear from the Fed on the 7th. That's a 98% likelihood, according to how traders are positioned, of no change here, Jeff. That doesn't mean it can't change, of course, but that's how traders are currently positioned for it.
Yeah, and I think that increase from, I want to say it was about 60% before their announcement of the jobs numbers last week. Don't hold me to that. If the viewers know, or if somebody in the chat knows, go ahead and send that through. But yeah, I think right now everybody is expecting the Fed to be in a wait and see type of mentality. So what ultimately is going to happen, we don't know, but keep an eye out. As one of our viewers commented, the Fed is going to be speaking this week. Now, question for you, Kevin. How do I find out when these things are going to be happening? Is there a way I can know in advance the day the Fed might be speaking or the day a company's earnings might be coming out? Do we have any tools available for that?
Yeah, we sure do. First of all, the CME Fed tool, the third-party app, the third-party website there, you can always rely on this, obviously. This is going to give you the specific date of the decision as it relates to the Fed stuff. But within Thinkorswim, of course, we can go to the Market Watch tab and slide over to the calendar, and then we can ask it to let us know about those specific events. What you're looking for here would be the Econo Day event, and then I would recommend clearing the filter, because what it's going to do is it's going to define the Econo Day event tied to a specific group or list. I had the S&P 500 in there so that I could see which companies that are part of the S&P 500 are slated to report. Let's go ahead and show that since you asked about it, Jeff. Econo Day event, we'll uncheck. We'll put earnings back in. Now I'm looking for all earnings, but chances are you don't want to see everything. So maybe you go in and say, all right, show me the most important ones. Show me just the S&P, not to suggest that the S&P 500 is the most important, but show me the ones that I want to see. You can define that by Russell 2000. You can define that by NASDAQ 100. Take your pick, but that's a good way to keep an eye on what's coming for the coming current day or subsequent days in the week, of course.
Beautiful. Thank you very much.
Of course. Now, let's see. We got to look at, let's take a look at the semiconductors here. Stocks. down about 0.2%. Got another one with a lot of lines drawn in. So let's clear this out. We'll redraw a lot of these. But Jeff, this looks so similar to everything else we're seeing, right? Look at that rally back through the through the 50-day, pardon me, and gapping on Friday through here. So we're sitting on that downsloping 50-day moving average. And I just want to reiterate something we briefly touched on was maybe the less likely ability of price action to maintain a downsloping moving average as support, but it doesn't mean it can't hold on to it, Jeff. So, again, we talk in the marketplace, especially as traders, we talk about probabilities. There are no certainties. So our approach is one of understanding the probability side of things and then positioning our trades based on those probabilities. If things are more in our favor, then some traders would press or add more values to the portfolio or add more trades to the portfolio. Or if we break down from those levels, they get more defensive in nature. They tighten up their belt a little bit, selling some of those positions with a little more risk, just building cash, or just selling down the size of those positions where they have potentially more risk. So reminder, we don't know with any true certainty what's coming. So the manner in which we balance our portfolio out is often tied to those probabilities. So Jeff, is there anything that you're watching as it relates to the stocks here that could give you a positive bent or a negative bent? How are you feeling as it relates to semis?
Well, really great call out. I think like a lot of viewers and traders out there, that 50-day simple moving average is probably what's on everybody's mind right now. But also that ledge you kind of put in there, what we'll call that 4,300-ish area.
Yeah.
A hold above that, and maybe you're wanting a little bit more than just 2 or 3 closes on this one. Maybe you need to see this come through, let's call it 3/4 of the earnings announcements that are happening. You get through 3/4 of earnings season and it holds that level. That might be a point where people start to say, okay, I'm slowly going to start to trickle in. I'm going to take a couple of scaled in pieces of this movement right here. I think right now, though, if you're getting in early, that's fine. Just be a little bit careful because you could have a quick up and down movement. If somebody announces earnings and they think this could be endemic of the overall market, that could drive down these semis, and that could be really, really tough. But so far, earnings have been fairly robust. I think over 60% or so have announced earnings that beat the consensus estimates. So right now, that's looking pretty decent. Earnings season isn't over yet, my friends, so be careful, and especially keep an eye on that forward guidance. A lot of people aren't giving enough attention to that right now. They're just saying, oh, the numbers that are coming in are looking good. Fantastic. Watch out for forward guidance. What happens in the news does matter.
Yes, it does. And why is it that the guidance matters? Well, just a reminder, the earnings report is the earnings for the time frame that's already passed. It's something that's already happened. The guidance and commentary around the guidance going forward will often be tied to certainties that the market's aware of. And unfortunately, as it relates to tariffs, there are few, if any, certainties right now. So many of those guidance discussions and the commentary after the announcements are going to be around tariffs, and they may very well provide you with, if X happens, then we think this, and if Y happens, we think this. And you could see those be quite disparate in terms of expectations. So just keep an eye on that stuff, everybody. That is absolutely something we are apt to hear about this week. And then I'll just remind you all, Jeff, one of the things that's kind of intriguing about the negative open to the market today, it's been that 2 weeks that we've been pushing to the upside, 9 days in a row, beautiful moves. And yet, I think one of the reasons for that is a lack of commentary out of the administration, or a bent towards, hey, we're working on this. The commentary has had a lot of impact on things. And the fact is now appears to be more discussion, more conversation. We heard from the administration just yesterday, or rather from the president just yesterday, stating that he wants to put a 100% tariff on the movie industry for movies that are made outside of the U.S., coming in to the States. So that was something to make note of. It certainly had an impact on one stock we'll look at in a moment. But I just wanted to bring that up because inevitably, Jeff, we can't grow to become complacent in our moves, particularly in the midst of what's been a more volatile market here.
Yeah. Hey, question for you, Kevin. So I know that there's a few companies that are really driving market movements. Most people refer to them as the Mag 7, and I think right now they're about 70% of the market's overall movement. One of the questions I'm getting from clients in the branches as I'm going around Southern California and Arizona is, how do I know if the market is weak, or how do I know if the market is strong? We see these movements. We're talking about 9-day winning streak here. What are some ways that a trader or a self-directed investor might assess weakness in the markets?
Well, one way could be quite simply to just monitor market with the Market Watch tab using the quote functionality. I've got this built in using the 11 sectors here, everybody. So remember, when we talk top-down method, broad indices into the 11 sectors of the U.S. market, and then beyond the sectors, everyone, we can go deeper into the industries and industry groups or sub-industries. Here, what we're seeing is just the sectors, the 11 of them, and a couple of things you can do pretty easily. You could do a sort based on a 21-day relative strength, so basically the last 3 to 4 weeks, how do things look, in terms of leadership. The weakest grouping has been the energy space, and our strongest has been technology. And if I can get this to load, it'll tell us maybe staples. We'll see how that goes. But then there's also an 89-day relative strength, which is a bit more obviously long-term in nature, gives you a similar view. But look at when you think about it in the longer run, Jeff, yeah, things have been improved for the last couple of weeks, but there at the bottom, discretionary, tech, communications, the three biggest groups that are tied to those Mag 7 stocks you mentioned, oddly enough.
Yeah. Okay. What about talking about market breadth? I know one of the contributors to the show, Rachel, she comes on. She has a certain chart that she looks at, which says, oh, there we go. Okay. Could you talk me through what is on her mind? What are some of the things that she's looking at, and maybe some takeaways for our viewers?
Well, first, let me just state, I love the fact that you brought this to us, shared it. It's one of my favorite things, as everybody knows, about the use of Thinkorswim. Build a tool, customize a script, etc. Share it with your community of other traders. For the record, all these scripts are going to be available in the show notes here, everybody. So check the show notes for the class. They'll be part of what you have available for sharing. You can input these yourselves. Place these on your own platform. So what we're looking at, the S&P stocks over the 200-day moving average, we're at about 41% almost. Those over the 50-day, we're closer to 53%. But I also note, Jeff, we have a lot of stocks that are trading in ranges. How do I know that? Well, look at the NYSE new highs and new lows. We're at very low levels on both, which tells us we're kind of rangy all of a sudden. And it also reminds us what we already know, that we're a ways from the peak, but we're also a ways from the most recent trough.
Gotcha. And so I also see that S&P, these are companies that are above the 200-day daily moving average and above the 50 daily moving average. Is that right? So what I could pull from that then is, all right, so it looks like things are starting to trend positively. And this is a bit more of a market breadth as well, because it's not just the 7 companies that can drive a market. This is all of I think there's 503 components in the S&P right now. This is all 503 components. Is that correct, Kevin?
Yes, it is.
Okay,
at least
beautiful.
For the SPX, and of course, then down below, then we're looking at those listed on the NYSE specific.
Wonderful. Okay, very helpful. I can be sharing this with some clients as I'm popping around the branches this week. Thank you very much for sharing that. I appreciate your insights.
And I'm going to, just for the good measure, I'm going to go ahead and share this grid with you all here in the chat. And I know I'm going to put it in the show notes as well, but I'll go ahead and put this in the chat for you all. Remember that our grids and anything we share is not a recommendation, and it's also not a guarantee to be accurate. So please keep that in mind as well. Jeff, we should make quickly note of the fact that we do have a little bit of short-term pop in the majors here, looking at the S&P off lows, the NASDAQ off lows, and the Russell off lows. We'll see if those lows and the movement off them is merely a bounce into a zone of internal resistance. Just quickly, because we're here, I thought we'd look at the intra-period. And this is an important level, everybody, because we gapped support 1 on the open, and that means that traditionally where the pivot point, that purple line is, which would be our equilibrium trade value for the day for the indice, in this case the SPX, if we gapped that level on the open, well, now traders are more inclined to make this S1 essentially the pivot point for the day, the price around which we expect majority of action to take place, and it can act as a resistance. Jeff, look at the tail we are putting in this 3 minutes as we are in the process of defining whether we're going to get a bounce or maybe get rejected here.
Yep, came up and then just a little bit of trepidation. Not sure everybody's completely bought into what's happening right here. I do like this though, and for a lot of intraday traders, you may want to consider putting these pivot points on your chart. Again, what we talked about earlier in the show, a lot of folks are looking at 20, 50, and 200-day simple moving averages because a lot of folks are looking at 20, 50, and 200-day simple moving averages. Same thing with the pivot points. It becomes a bit of a self-fulfilling prophecy. So I like to see what other people are looking at. Kevin?
Yep, I tend to agree with that. You'll notice here the NDX with a similar move did get through the S1 and is trying to hold S1. So keep an eye on that on the NDX, and then the Russell, probably something similar. Russell a little bit better. The lows, not really, taking us out just yet. And the move that you made in the last 5 minutes kind of holding the S1. So we'll see how this plays. But, again, often we just need a little bit more time to validate that. Okay, Jeff, quickly, I want to hit on some key details of some changes in the market, some upgrades, some downgrades.
Ooh, all right.
You mentioned some of those Mag 7s. I got to bring up Netflix because I did make the note of what's happened with the president's tweet yesterday. We had a pretty weak open. We're off about 2.5%, but that 2.5, we were much lower, about $20 lower already. You are getting a short-term sell signal, and I do mean short-term. It's the first 30 minutes of the market. Everybody don't overreact. But as you can see, one of those key things as it relates to the RSI is, Jeff, after a run into overbought conditions, some traders will utilize a close in the RSI below that overbought condition to be the first signal that it might be time to tighten up the belt a little bit on a long position. You have any thoughts about that?
Yeah, really good call out on that. Also, everybody, draw your attention to that volume. You notice as we've gone higher, volume has gotten a little bit quieter. Maybe not everybody is buying in, or heck, that's a pretty good run. I'll start taking some profits off the table, putting a little bit of downward pressure on Netflix. Now, where might this thing stop? Kevin, my attention is drawn to that, what looks like February, maybe 11th, 12th, 13th, or 14th, that high point that we hit back there. And I'll call it, what's that, 1062 or so, 1050, 1060. Yeah, something like that. So that might be where your short-term support is coming in for those of you looking to make a play on a Netflix. Or if you're saying, hey, I don't think Netflix is a great buy right now, I'm looking at shorting that company, where might a target price be? It could also be to that level, Kevin.
Yeah, that makes some sense. Could it work that way for a very short-term trader? It's certainly possible. We are already below the low of Friday. That is our clear high day in this rally to this point. So maybe we're in the midst of that pullback. Some traders would say the 20-day is a little too slow on Netflix. They might want to see what the 10-day looks like. Oh, what a shock. We just tested it. Today's low, right to the 10-day. So perhaps you've got, I know, but look, it has to be something. And we're above it now for about 3 straight weeks as of the 9th of April. And the test, real quick, was a very brief bull flag that got developed, that got resolved to the upside bullishly. So that may very well give you something to work with there at the 10-day, right around 1107. If you're a short-term trader, so maybe something to keep an eye on. Of course, you could just say, yeah, you know what? If it did get down to 1060, I'd be comfy. I've been in this forever. I'm not worried about it. That's another viewpoint. Either one of those thoughts is perfectly valid. It all depends on how you like to do things, everybody.
Yeah.
Okay, so there was just one big one on Netflix as it related to that tweet. I had an upgrade over the weekend here on Reddit. Reddit was upgraded at Seaport Research, upgraded to buy, had previously been at neutral, Jeff. New target on this one at 165. So pretty well stands out. That's not a terrible level. We'll remind ourselves that these targets that analysts set, they're never a guarantee to be achieved. Jeff, the price action in here is a little, lackadaisical, let's say. Doesn't seem like there's a whole lot of enthusiasm. They just had a big report and big volume on Friday. But, what's happening with the trend? How are you looking at this?
It's tough anytime you have two moving averages coming together to not give a lot of attention to them, whether it be a bullish or a bearish indicator. In this case, being below both of them, that would be a bearish indicator. So a potential amount of short-term resistance coming by way of the 200 and the 50 in blue and purple. Am I correct on that, Kevin? Have I finally figured out the colors of these?
Now, buddy. You're on the ball.
I get lucky sometimes. Sure, it takes me a couple of minutes, but yeah, for the viewers out there, when traders see moving averages coming together, that just gives a little bit more weight. If somebody's only looking at the 200 and somebody else is only looking at the 50, now both of these are in the same spot. Both of those individuals are looking at that same level. So this is a short-term, potentially strong resistance level for a company like Reddit. What might you look for? You're probably going to want to see a few closes above both of those levels, not just one, not just the other, but both of those levels to give you a little bit of conviction that, yes, we did finally break past these levels, and now we might start ourselves a new bullish run.
Yeah, and yet, Jeff, there's another trader out there who's going to say, but Kev, we're above the 20-day.
Yeah, great call
out. 2 weeks. And look at how strong we were when we got above the 20-day way back here. You know, this run back in September held the 20-day on, essentially till at least December, right? And then you had a couple of days beneath it. You had some Horner rule testing going on beneath the 20-day, and then it still kept going. It ran all the way to 230 from something like 60, 65. So an incredible run. Then if you were just working against the 20-day as a short-term trader, probably get out when we violate the 50-day with some conviction here. And if you did it on even the worst time there, you're out at 170 for a positive 100-point move if you were long when you grabbed the 20-day originally. The reason I'm bringing it up is because we are once again above it. Could a trader, Jeff, start establishing support or establishing new positions such that as long as the 20 remains below the current price action, that they might stick with the position there?
Yeah, absolutely. And a really good call out too. Going back to what you were talking about, probabilities, remember everybody, when you're getting into a trade, risk versus reward. In this case, your reward is fairly high. Let's call it getting above that 50 and 200, going all the way back up to that 230 level up there. What's your risk? Well, having it come down maybe to the 20, and you say if it closes below the 20 for a few periods, I'm out. Great. You know pretty quickly whether or not you've got a successful trade or not, or saying, I'll give it a little bit more and it drops down to 80. So you've got a risk of about, we'll call it 1-to-4 ratio, somewhere around there. Not a bad risk to reward for somebody considering getting into a trade like Reddit.
Yeah, that starts to lean into the proper risk versus reward for many traders when you can get over anything better than 1-to-2 for a lot of traders is sufficient, 1-to-3 for others. Anything better than 1-to-3 starts to really look enticing to a lot of traders. We should also very briefly mention Phillips Securities downgraded Microsoft. Since we were talking Mag 7s, I thought we should look at it as well. So Microsoft made a really nice pop on their earnings, and it was very well received, Jeff. And yet I cannot get away from the visual of this downtrend. So I'm going to put that on Kevin, and just let you know that Microsoft was downgraded to accumulate at Phillips Securities, had previously been a buy. They had to leave the price target unchanged at 480.
Gotcha. Yeah. Okay. So what are we keeping our eyes on? Probably that 200-day simple moving average, I would imagine might be your potential short-term support.
Yeah, I think that makes a lot of sense for many traders. The 200-day down below, if we continue to kind of hit our heads on this wall of potential resistance there, you can see the tails for 3 days in a row now have all been in that 435 to 437 range. We've been beaten back from it. The truth is we've not really concerned ourselves. Under 125, you might start to think, now we have the potential to see, I said 425, not 125, 425. We have the potential to pull back to the 200-day and the 414. That becomes a very short-term indication of potential pullback or drawdown. But it was a great pop, and Phillips Securities is basically saying that the recent price performance makes the buy at this time less comfortable for them. I think that's how they're saying it. So
good call.
May want to keep that in mind. So there's a lot going on this week. Plenty to hear from the market in the way of interest rates and in the way of earnings details and everything. So it's going to be a very busy week. needless to say, my encouragement, everybody, is to keep it tuned right here to the Schwab YouTube coaching channel, because you all know we've got more live content coming this week, this day today, all day the rest of the week, of course, and a virtual event for you available at the end of the day today, tomorrow, and Wednesday, Thursday, excuse me. So let me just show you one final thing as we're working through that. I wanted you to be reminded of the calendar and the schedule here. Come into the schwab.com coaching page, live webcasts and virtual workshops, everyone. And then you can find at the bottom of today, we should have these events here. I thought they were going to pop up down below, but they're not show. Oh, that's Monday. That's why. I'm on the wrong one. There it is. Advanced Option Strategies Workshop, everybody. So you'll notice we do not have Liz Ann on the set for today, but we do have our friend Barb is going to be here teaching ETFs today. So just a heads up, if you're looking for more ETF discussion, reminder, these are non-archive segments, but there's your opportunity for that today. And then that Advanced Options Workshop, the virtual workshop today, tomorrow, Wednesday, and Thursday. That's where you can get squared away for that. So Jeff,
cool.
Hope it's needless to say, buddy, I love having you. I only get you once a month, but when I do, I always have a good time. Go get some food, man. Let's get that.
Great. I need some carbohydrates in my life right now, Kevin. I tell you what I'm going to do, everybody. I'm going to go grab myself a donut. I hope you all have a great rest of your day. Kevin, always a pleasure getting to collaborate with you, my friend. Thank you very much for having me on your show.
Always my pleasure. And a big thanks to Mike Fairburn there in the chat, everybody. I hope you all have a fantastic Monday. Stick around for Jeff's World coming up at 11 a.m. Eastern. We hope to see you all again real soon.